Okay, let's look at rounding tops and bottoms. These are long-term reversal patterns. They are also referred to as saucer bottoms or tops. They represent a long consolidation period that turns from either a bearish bias to a bullish bias or vice versa.
Thanks for the introduction. That means it reverses from a downtrend to an uptrend on a rounding bottom and from an uptrend to a downtrend on a rounding top.
Yes, sorry, I got a bit technical there. Let's look at rounding bottoms first.
So, how do rounding bottoms patterns form then?
So, like all of the patterns we've looked at in this lesson, in order to be a reversal pattern, there must be a prior trend to reverse. Ideally, the low of a rounding bottom will mark a new low.
Okay, that makes sense. It wouldn't be any use if it develops in a sideways trending market.
The first portion of the rounding bottom is the decline that leads to the low of the pattern. This decline can take on different forms. Some are quite jagged with a number of highs and lows, while others trade lower in a smooth fashion.
I think I understand.
The low of the rounding bottom can resemble a V-bottom, but should not be too sharp and should take a few periods to form.
I'm with you.
The advance from the lows forms the right half of the pattern and should take about the same amount of time as the prior decline. If the advance is too sharp, then the validity of a rounding bottom may be in question.
Okay, so the advance from the lows needs to be steady in order for it to be valid.
Yes, that's right. The confirmation comes with a resistance breakout. While symmetry is preferable, on the rounding bottom, the left and right side do not have to be equal in time or slope. The important thing is to capture the essence of the pattern. So, rounding tops patterns form in the opposite way that rounding bottoms do. It's a bearish reversal pattern.
So in an uptrend, the price rounds and can form a little V at the top. It's useful if it's symmetrical, and the confirmation is when it breaks support.
That's it. Well done. Let's look at how to trade a rounding bottom pattern. As you'd have guessed by now, the rounding top is broadly the inverse.
Okay, sounds good.
So, bullish confirmation comes when the pattern breaks above the high that marked the beginning of the decline at the start of the pattern. As with most resistant breakouts, this level can become support.
That makes sense.
Traders set price targets by measuring the height from the lowest point of the pattern to the resistance level. Like most targets, this is projected up from the breakout.
Got it. Thanks for the heads up. What about the stop loss?
Like most bullish reversal patterns, this can be set under the old resistance line.
Thanks, yes, that makes sense.
Let's show you a weekly chart of gold. We can see a downward trend into a rounding bottom here. It's clearly not a V shape. Instead, the price rounds in a U shape. This tells us that there is a gradual and long-term change of power going on from bears to bulls. The pattern's resistance line is here at the top. Now, let's zoom in and take a look at the pattern in a daily time frame. The bottoming support line can be drawn here.
And if traders are looking at this pattern, would the confirmation be when the price breaks above the resistance line?
Yes, once confirmed, the next thing traders do is work out the price target. For this pattern, it's the distance from the support to the resistance line, projected from the breakout. This is quite a deep pattern, so we need to jump back to weekly to see the price target.
That's a big move.
Well, it's a long-term pattern, so the price target might be quite big. Traders can set their stop loss below the resistance. If the price retreats back to this level, the trend has likely not reversed and a trader would want out of the trade.